Optimism in stock markets is propped up today by the positive news on the trade relations between the United States and China. The parties agreed to create favorable conditions to enable implementation of the first phase trade deal. The U.S. non-farm payrolls showed today that the unemployment rate hit a fresh record since 1940. This week, the burning issue for global investors is gradual restarting business activity and lifting lockdown measures in different countries worldwide, including the United States. Such developments made a positive impact on the U.S. stocks. The benchmark stock indexes are extending a cautious rally today. Futures on the Dow Jones opened the New York trade with a 0.93% gain at the level of 24,107. Other indexes rose to the same extent. Investors' hopes for a revival of the global economy dampened the broad-based strength of the US dollar as a safe haven asset. Today, the US dollar index was trading lower for the most day, but it rose marginally in the New York session to trade at 99.80. Besides, the US dollar has been wound down by the fact that the Fed Reserve could resort to a negative funds rate. Though the regulator used to oppose such a move, market participants do not rule out that experiment under the pandemic conditions. The number of jobs in the United States public and private sectors shrank the record 20.5 million in April. The unemployment rate surged to 14.7% from 4.4% in March. This is the highest increase per month in the history of such surveys. Interestingly, the median forecast suggested more dismal figures. The market expected the unemployment rate at 16% and the number of layoffs at 22 million. The Canadian dollar is sensitive to similar data on Canada's employment. No wonder Canada's labor market has been badly affected. However, the downbeat data is not worse than expected. The unemployment rate came in at 13% versus the expected 18%. Gaining ground against its American counterpart today, the loonie strengthened to a one-week high. The USD/CAD pair had been trading at 1.3950 before the report on the labor market. Then the Canadian dollar lost some steam. Notably, the loonie regained footing like other commodity currencies. The oil market found support from the OPEC Plus pact on oil production cuts. Nevertheless, Brent contract with the nearest delivery term failed to surpass the level of $30 a barrel. The bearish outlook for WTI is valid. Now it makes sense to be cautious about buying long-term oil futures. Meanwhile, the oil market remains in the grip of bears. Bitcoin has been extending a winning streak for the third day in a row despite high volatility of digital assets. At the end of this week, the most popular cryptocurrency approached the level of $10,000 per token, with the prospects for a further rally. The odds for the uptrend are even better than in the run-up to the Bitcoin halving. This is an event when the block reward for mining new Bitcoin is halved. It's due in a few days. Following the halving, analysts foresee a minor retracement. Then Bitcoin is expected to grow in a short and long-term periods inside the overall uptrend. Bitcoin is on the verge of a milestone which happens every 4 years. However, its immediate future is unclear. Judging by charts, most crypto traders have not figured out yet what to do with a cryptocurrency. That's all for today. We wish you profitable deals and have a nice weekend. Waiting for you on our channel on Monday. See you!